Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Well, coming up, who should be picking the stocks these days? Veteran investor David Paradice says he's handing the mantle over to the young to keep ahead in the investment arena, and that the Kavanaugh appointment in the US has led to a backlash of old guys in suits against them anyway. David Paradice's insights coming up. The big banks still reeling from the Royal Commission, and today it's ANZ's turn, taking a $420 million post-tax hit to deal with customer fallout. Is that as bad as it gets, we ask? And Sotheby's gets Banksy. The famous graffiti artist rocks the art world when a favourite artwork self-destructs on sale. Well, let's first go to the Sydney Opera House billboard story, which has certainly moved on from where we left it on Friday, hasn't it? By Saturday morning, over our cornflakes, the Sydney Morning Herald announced that the Premier, Gladys Berejiklian, had ruled that the richest horse race in the world on turf, the Everest, which runs this Saturday at Randwick, was, well, you know, was going to be all over the Opera House. Will have its jockey draw branded all over the sails of the Sydney Opera House, and that will be tomorrow night. It's a big victory for New South Wales racing chief and founder of the race, Peter V'landys. This is what he told me on Friday.
Well, that she's the elected representative. Look, if she said no, that's fine with us. But we want to be told by the government. Does the government in New South Wales want to support events or don't they? Or it goes a little bit deeper than that, because for me, doing business in New South Wales, it's run by bureaucrats. You don't get past the bureaucrats 90% of the time. And when we highlighted this, I was inundated with business people throughout New South Wales that suffer the same fate. They never get to a minister, they never get to an elected representative. All they do is get to the bureaucrat who's faceless, unelected, and no deal's done. So how do you do business in New South Wales?
So, a victory for Mr V'landys, the Premier's decision, but an equal victory surely for Alan Jones. We've all been reminded yet again of his power-broking credentials and a very effective comeback after his court loss to the Wagner family in Queensland, which we covered just a month ago. Let's remind ourselves of Mr Jones in full flight, calling for the sacking of Sydney Opera House CEO Louise Heron.
What we won't do is put text or videos of horses running or horses' numbers or names or the Everest logo on the Opera House.
Why?
It's not a billboard.
Why?
It's not a billboard.
Who said? Who said? You. Who the hell do you... Hang on, Louise, who do you think you are? This is a national...
Do you want me to answer, or do you want to keep on sprouting at me?
No, well, hang on. Out there, I'll tell you what they're saying. They're saying that you should go today. That's what they're saying. Ask the open line here and see the emails that are written to me. They say if this can't be approved, you should be sacked because you don't own the Opera House. To put colours alone means nothing.
Well, since then, even the Prime Minister, the punter's friends, was back on air to support a racing billboard.
It's not like they're painting it on there. I mean, it's some lights flashing up there for a brief moment at a time, and that goes all around the world, and they do it for other things, and, you know, the Wallabies indeed, and others. So, look, I just don't understand why we tie ourselves up in knots about these things.
As I say, a lot of column inches and airwaves devoted to this story. First prize has to go to the Batuta Advocate with this spoof. Alan Jones bullies Opera House into promoting his mate's Gumtree ad for a 2008 Land Cruiser. Well, look, a couple of other points. Why did it move from the bridge, which is where Mr V'landys first wanted to do it? It was going to look like this. I think we've got a picture for you here. Look at that. So why did government change his mind? Well, one reason just might be that on Friday, coming up, just 3 days after tomorrow, Tuesday, Prince Harry will be climbing the bridge with the Prime Minister Scott Morrison to plant the Invictus flag. I'm not sure how long Peter V'landys would have wanted his draw banners up, but even if it was just for Tuesday, it kind of takes the shine off Invictus, doesn't it? Secondly, there's been a predictable outcry from the anti-gambling lobby. Tim Costello told ABC Radio that the ABC Radio thanks Alan Jones this morning for what he said will be like a psychic vomit from around the nation, that horse racing that is up 7% in profits to over $3.3 billion needs our Opera House. Well, Peter V'landys said the Opera House lighting up is promoting an event, not gambling. Well, he would say that, wouldn't he? But surely the big problems with gambling are biggest at the pokey level. Where the stakes are very high, though, is within the State Liberal Party, where clearly all is not well. Mutterings about the Premier, who is well liked, yes, but appearing weaker in leadership, whether it's settling the spat between the senior MPs or the Wagga by-election, or being bullied by Alan Jones. Mike Baird's excellent premiership went to the dogs before he fell away. Gladys Berejiklian, leading Australia's strongest state with one of the best recent reform records around, may have her own Everest to climb come the March election. Well, in other news today, ANZ, the third biggest banks to flag a hit, of the big banks to flag a hit to earnings off the back of the Banking Royal Commission. ANZ $374 million in refunds were going to customers, and other remediation costs have been identified by reviews that are still ongoing. Other identified items set to impact the bottom line include $206 million in accelerated amortisation, $104 million in restructuring, $55 million in legal costs associated with the responding to the Royal Commission. The warning comes ahead of a standing Economics Committee hearing later this week. The CEOs of the big four banks, including ANZ, will appear. So how much do the rest of the big four banks set to lose? How much are they set to lose from increased compensation payouts, court cases and the Royal Commission? For more, I'm joined by Chief Business Reporter Leo Shanahan. Leo, it's good to have you here. Now, we haven't really assessed how all the banks are going.
From time to time. What I thought was interesting is to look at what's really changed in the last couple of years, where we had this, I suppose, paradigm shift in the way we started to think about banks. For those covering it, like myself, I suppose that happened a good 4 years ago when the financial planner scandal started to break out. But really, and then now highly accentuated, of course, in the Royal Commission. But this has been going on for a few years, and I thought it's worth just going. I mean, today we say, yeah, ANZ's got these provisions. What's that? 374 million. But I thought it was worth going and highlighting some of these provisions and some of these costs that just in the last 2 years banks have faced. So if we start off with the ANZ, of course, today they announced this provision of 700 million, 374 million of that in remediation cost to customer fees for no service, inappropriate advice and others. 59 million of that is fee for no service, 50 million in relation to their costs for the ASIC case brought against them for BBSW in the last couple of years, and another 50 million they've put aside for the Royal Commission. Now, that's not just today's announcement. These are just costs over the last couple of years. If we move on to, say, the CBA, obviously that huge one, almost $1 billion or $750 million in the AUSTRAC, that's $700 million. One-off regulatory costs associated with the Royal Commission, 155. Their compensation estimate for fees for no service is about 150 million. Their BBSW payouts about 20 million. And this is just the last couple of years. Compliance program and regulation costs were 78 million in 2016. Slightly down actually in 2017 to 69, but going up to 283 million. In 2018.
Wow.
These costs, and Westpac only recently, they put out a statement around what their updated costs would be. That's 235 million in FY18. In FY17, cost for repayments to customers, poor advice, that was 118 million. Long-term costs associated, ASIC fee for no service, 250 million. Provisions in the last couple of years jumped from 173 million to 279 million, as well as 50 million for them. As well for the Royal Commission, and then the NAB. Now the NAB, it gets a bit murkier because they've been so badly pinged over fee for no service recently, but looks Nullis and the extent to which you want to associate that superannuation trustee with NAB as the same entity, but over 100 million, NAB over 100 million in fees for no service. Let's take NAB's, orthodox cost, I suppose, or conservative cost, 50 million for Royal Commission.
Yes.
And ASIC now taking them to court for those fees for no service costs. Now, they have potential fines of over $1 billion in that.
So that's actually to come, because that was my next question. Having gone through, really, the bulk of the Royal Commission in terms of actually all the misbehaviour, because it's our next go with the Royal Commission will be looking at policy and policy development. Yeah. Have we now got to a stage where we can, from an investment point of view, put a total number on all of this?
Or fee for no service, I mean, they, for example, have said that the CBA is at about 144 million now. That's including future provisions. NAB, 6.7, but if you add NORS to that, that's over 100 million.
Yeah.
So you get into a space where you can start to estimate the costs.
Yes.
But I suppose it's very hard to see, like, for example, down the line with NAB and an ASIC case against them. What are the possible provisions for that? You just don't know. And I mean, look at AUSTRAC. They initially put aside, I think it was under 100 million for that, and then it ended up being, 700. And so it's just extraordinary the bite this is taking.
Yep.
And I'm not saying unjustifiably so, mind you, but the bite this is taking out of the financial services sector, the banking sector in this country. And if we think that this isn't going to bite into their costs overall, and we're not going to see harder cost-cutting programs by the Big Four. We saw NAB do that last year, but I think down the line, if it's not announced this year by some of the other Big Four, you're going to see some other big cost-cutting measures.
Quite brutal costs.
And I think so, yeah.
Yeah, OK. Because it's to me, it's quite interesting looking at these four banks, because you think of fines of hundreds of millions of dollars. Now, when their profits were billions and billions, that was one thing, but all these banks have shrunk.
Yeah, and the margins shrink with them.
And so their total profits, bottom line profits by definition, they'll have sold a lot of these assets, they'll have been smaller. So these fees, in a relative sense, start becoming
and you look to start looking at the margins on interest rates, on mortgage rates, which is just the bread and butter of the banks. It's really how they make all the money in this country. They're starting to put up interest rates out of cycle. Why? Because the margins are tighter.
Yes.
Now the cost of lending goes up.
Yes.
They're going to start feeling it. I mean, it's interesting today. Of course, we have this announcement with CBA and Australia Post, which I think feeds into this broader point as well.
And that's compensating for the closing of branches.
Yeah,
and 200 branches or something.
Yeah, and I think the banks are actually going to increase this because it gives them the capacity to continue to close branches. Of course, Australia Post is in a position where they can leverage a bit more out of the banks, perhaps than previously before, but it gives the banks
putting a nice spin on it today.
Yeah, it gives the banks capacity to close more branches, so why wouldn't they do it?
Yeah, Leo Shanahan, thank you very much. Really interesting numbers there. Okay. Now, after the break, diving into the markets, and A2 milk shares on the defensive. We'll find out why with Michael McCarthy from CMC Markets next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. World leaders must make rapid, far-reaching and unprecedented changes to prevent higher than anticipated temperature increases. That's among the findings of the newly released report from the United Nations Intergovernmental Panel on Climate Change, the IPCC. States temperatures are likely to rise by 1.5 degrees between 2030 and 2052 if global warming continues at its current pace and without dramatic policy changes. The Prime Minister says he will consider the report but insists Australia is meeting its commitments.
Look, we'll look at the report carefully. The government, Australia, has its commitments. They're set down 26% by 2030. We'll meet those commitments. But at the end of the day, we want to ensure that electricity prices are lower, not just for households. That's where my focus is, but for small businesses.
The IPCC report also says renewable energy would need to supply 70 to 85% of electricity by 2050 to stay within a 1.5 degree temperature range. The report is seen as the main scientific guide for government policymakers on how to implement the 2015 Paris Agreement. The Paris Pact aims to limit global average temperature rise to well below 2 degrees above pre-industrial levels. And the Morrison government is accelerating its attack on Labor's housing policies, arguing it will worsen the market slowdown. If an elected Labor government would limit negative gearing to newly built homes and halve the 50% capital gains tax discount. The Prime Minister has welcomed cheaper prices, leading to less investors and more first-home buyers, but argues Labor policies would push prices too low.
Under our policies, more Australians are getting a loan and getting into their first home than for many, many years. But what you don't want to do is take a soft landing that we've been able to achieve as in our government's economic policies and turn it into a crash landing in the housing market under Bill Shorten.
Mr Shorten has pushed back at the Prime Minister, suggesting Labor are the subject of a scare campaign.
It's a bit hard to blame Labor when we're not even in. The real problem, though, in housing prices is they're still very high in terms of being unaffordable and inaccessible for first home buyers. I make no apology for wanting to see young couples be able to afford to buy their first home.
Well, let's go to a couple of corporate stories now. A2 Milk CEO says there is nothing untoward about recent share sales by a raft of executives.
I was unfortunately in a position where I had to sell those shares. That was an understood position as part of my transition. And it hurt me because the benefit in what I see ahead for the company is that those shares will improve in value. So it hurt me to have to sell, but I had no choice but to sell. The great news is that I have a lot of shares that are yet to vest and more shares that will come as part of our long-term incentive program. So my interests are inextricably linked to our investors, and they have been from the day I signed my contract.
A2 CEO Jane Herdlicke there. Now, it comes amid fresh calls the infant formula maker may face a sales decline in its English label product online when China's new e-commerce laws kick into effect in January. Company CEO Jane Herdlicke shrugged off the caution, and she says she's comfortable with the business model heading into the changes and sales won't be taking a hit.
Honestly, from our standpoint, we're well prepared. We're looking forward to improved sophistication. We think this plays to our hand because we have quite a sophisticated commercial Daigou structure. And we will work to ensure that our product is in the hands of consumers because there's quite a lot of demand that sits behind our brand. And we'll do whatever we need to do to ensure that we comply with regulations and there is no change to supply lines into a market that's very hungry for our product.
Well, the A2 Milk story wasn't the only company news today. In fact, a sizable takeover bid was announced by US private equity group KKR for software services company MYOB. Well, joining me to unpack the corporate news of the day, Michael McCarthy from CMC Markets. Michael, hello. Can we go to this prospective takeover bid first? I mean, that came out of nowhere, didn't it?
Well, it certainly didn't. It couldn't have come on a better day. Investors were feeling some pain in their portfolio as the market sold down today, but those who are holding MYOB have done very well, and that 19% jump in the share price is no surprise. The shares closed just under $3 on Friday. The proposal that's been put forward, and it is conditional, but KKR's proposal is to buy what they don't currently own, around 80% of the company, at $3.70. So the market immediately adjusted the share price, and it looks like MYOB shareholders are the winners today.
Wow. Well, I mean, presumably they can see something, these private equity holders, in terms of turning this around a little bit faster than Tim Reed was planning.
Absolutely, and the 16% jump in profitability that they saw at their last report is good news. There was a rise in costs most recently reported, and that had some investors concerned, but I'd suggest that it was that 61% jump in subscribers that really attracted KKR's attention.
Ah, OK. All right. Well, that is very interesting. Do you think it'll go through?
It seems to be. It's a lot less conditional than many of the other proposals we've seen, remembering that KKR already have a substantial chunk of the company. They've got a real vested interest in doing this deal. You might see some pushback on it, given that the company has turned a corner, apparently, judging by the numbers, and some shareholders may want to stay exposed to MYOB. So it might take a higher price than is currently on the table to get this deal done.
That's very interesting. Right. OK, well, we were mentioning A2 just a moment ago. Now, Jane Herdlicke was on the channel today defending, first of all, her sales and indeed some of the executive sales of shares in A2. What did you think of that? And what should investors think about executives selling down their own company shares?
Well, I think it's something we have to look at on a case-by-case basis. We saw, for example, the principals at Kogan selling down their shareholdings, or attempting to, and that had a very dramatic impact on the share price. So there's no surprise that we're seeing a reaction to that news. However, it is very explicable. One of the basics of investment, one of the key principles that most individual investors use, is to diversify their exposures. Now, if you've got a significant shareholding in the company where you also earn your income, you're very heavily concentrated. So what was said today makes perfect sense to me, but I don't think that'll stop everybody from taking this as a sign. I would, however, point out with the share price coming back towards its lowest level since February earlier this year, this is the level at which BlackRock, one of the world's most successful and largest investors, stepped up and soaked up a 6% stake. So there's no guarantee that they'll act again at these current levels, but when the world's largest, most successful investor sees value in a share price at a particular level, perhaps investors should rethink a knee-jerk reaction to today's news.
And what about ANZ? I mean, that was a very big provision. Was that expected by the market, that something was coming at some stage?
Absolutely. All of the big four banks are facing significant costs, both in terms of compensating customers and in putting in place processes to make sure that these things don't happen again. So ANZ getting ahead of the game there. We know, of course, already that CBA had a $700 million fine, and I suspect that we're going to see similar provisions over the coming 18 months from all of the big four. The pressure on the sector today did appear to be related to the broader market selling, and ANZ's performance was broadly in line with its peers, so I don't think this was a shock to shareholders.
Yeah, and finally, just taking you back to Friday and the non-farm payrolls, I mean, this is an extraordinary numbers coming out of the US in terms of unemployment now, isn't it?
Absolutely. Record lows for unemployment. Yeah. And even though the headline number was a miss at 136,000 jobs as opposed to expectations at 185,000, the revision of the previous month by 75,000 up means that 190,000 jobs are being created a month in the US, and that's a sign of a very robust economy.
Gee, you're good with your numbers, Michael McCarthy. Thank you very much for joining us.
Thank you.
Terrific. Well, after the break, Rich Listers back a $500 million LIC backing medical research. David Paradice, founder of Paradice Investment Management, next.
This is Ticky on Your Money, covering the big business stories.
Yes, welcome back. Well, next month, a new $500 million LIC, that's a listed investment company, will hit the boards. With the difference, it'll be open to retail investors, but the stocks will be picked by some of the best investment managers in the market. It's all part of the Sohn Hearts Minds investment conference, which seems to get bigger every year. The top dogs from Magellan, Caledonia, Cooper Investors, Paradice and Regal will each pick their top 3 stocks, along with the best 10 stock picks from the conference itself. Well, fund manager fees are donated to good causes, but you can bet they're also looking for good returns from their star choices. Now, one of these top investors is David Paradice, and he joins me live in the studio. David, it's great to have you here in the studio. So this is becoming quite a big deal now, isn't it?
It's a great idea.
Yeah, and lots of you doing it obviously for a cause, but you're going through your fund management life, and lots of you are thinking about this space now, aren't you?
Yeah, I think it's important to give back and use the skills that we've achieved over many years, I suppose, to good causes.
Well, it's refreshing when you think about the Royal Commission and how everything seems to be going in the other direction. Yeah, there's a bit of taking out rather than giving back. You know, how do you see the Royal Commission?
Well, ultimately, I think there are some aspects of it that are good. One being that ultimately you always want money to flow to where the best returns are, or anything where the best returns are. And so I feel that, see, for us, we all look at net returns, meaning net return after fees and else. You want money to flow to the best fund managers as opposed to where the person that's advising someone gets the most commission, right? So you always want the money to flow to the best fund manager.
So you think that the system has historically been dysfunctional because of the way that the commissions have...
Some aspects of it, yes, and that's what they're focusing on at the moment.
Indeed.
Is that advisors were steering clients towards fund managers or investments where they're getting the most commission, which is... Now, you represent both industry funds and retail funds, don't you, across the board? We tend to sort of look at it by carving them down in that way, but actually the way one should be looking at it more perhaps is value investing or other types of investing. What do you think is going to really separate the men from the boys, the women from the girls as we go forward? Going forward. It's really interesting because over the last couple of years, a lot of most of the market, as we know, has been driven by what they call growth stocks, long duration equities. And so if you look at America, we've got things like Amazon, Apple, the FANG stocks, Google, have driven a lot of the performance. And one of the reasons for that is that interest rates are currently low, and you will get a stock like a technology stock, and it's got growth a long way out. And how people value these things is they get net present value of earnings, and they apply a discount rate. Now, if the discount rate interest rates are going up, then those stocks generally underperform in a market. So you've had a huge performance because interest rates are low. Now it looks, as you saw, I think a couple of nights ago, that in the US, unemployment is now down to its lowest level at 3.7%.
Yeah. So put it another way, it's going to be harder to make money easily.
From the growth side of things, which we're more a value type shop, and so our biggest focus is capital preservation.
Yes.
And we hate volatility, and our clients hate volatility. Yeah. And with growth stocks, as you'd seen many years ago, actually when I first started back in 2000, in the first 3 months when I started, it was a nightmare because technology stocks were motoring and we were underperforming.
Yes.
But then after that, the market got sense of itself, fell down quite a lot.
Yes.
We outperformed.
Do you see that happening again sometime soon?
Not soon, but I think there'll be a rotation from growth to value. And value will go also because interest rates are going up because the economy is very strong in the US, and that's positive for some of these value stocks.
Now, you had a bit of an aha moment in an Uber in the States. Tell me about that.
This is just 2 weeks ago. I was in an Uber and having a chat, as you normally do with these guys. Actually, it was a female. It was about a late 60s, I suppose, alternative type.
Yes.
And she's saying, "What do you do?" I said, "I'm a fund manager." And she said, "Oh, yeah." And then, so do you get dressed in a suit? And I said, "Oh, sometimes, yeah." She said, "Oh, I hate guys in suits." And
she hates guys in suits?
Yeah, hates guys in suits. And I said, "Why is that?" "Well, look at the government." And so then, of course, the Brett Kavanaugh thing came up, and if you look, all these guys, a lot of these people are older guys making decisions in suits. And I thought, she's right, you know. And I think countries and companies and people like that, and even my business, has to evolve from older guys like myself in a suit to younger guys. And I think.
So is that what you're doing?
Yeah, so I've had I gave up managing money about 8 years ago.
Yes.
So we've been going for 18 years, and this one particular fund that we have, which is our small cap fund, has done 18% annualised return over that 18-year period, outperforming by 11%. So it's been a really strong fund. But about 8 years ago, or 8 to 10 years ago, a couple of young guys took over from me, and it was a really good thing to happen.
Yeah.
But you look at
and you think they have a completely different mindset? They understand different types of stocks differently?
Yeah,
or
I think
why?
so. Yeah, I think the thinking evolves. It evolves, and there's nothing worse than older guys sitting back and thinking they know all about it. Many years ago, the way to look at a stock used to be look at its asset backing, right?
Yes.
Now, if you look at, say, retailing stocks, you don't want to have strong asset backing. You don't want them to own their buildings. You want them to putting their money into inventory and turning their inventory over quickly, so they get a high return on assets. So the real key now is incremental return on assets and a high return on assets.
Okay, because I find that really interesting that you sort of step back. I bet you haven't stepped back that far actually, but you know, handed certain sort of aspects over to younger players, whereas Hamish Douglas at Magellan, he's actually stepping back from running the thing so that he can do more stock picking. So one reads.
Yeah. I don't know.
Yeah,
Hamish is good at what he does. He's done a fantastic job, and he'll continue to do so. But you know, and I think he feels the same as I do. Is that you've got all these young guys coming up, and you want to let them to evolve. Yes. And when you find really good people, you know, you want them to take over from you. Ultimately, you want people underneath you to want your job.
So, how should we look at, say, something like the ETF market? How should investors look at the ETF market compared to, you know, value investors?
It is interesting. You know, you look at the Royal Commission, and the key issue that I've always felt is that we always try and invest in the best stocks. We don't get compromised to be influenced by, I don't know, how as an investor we could be compromised, but if you're a financial planner and you're trying to stick someone else into a fund manager, and he's going to give you much more commission as opposed to the returns.
Yes.
Our total focus in our business is on compounding returns over a long period of time. And if you keep that focus, and if there's an ETF or something like that that provides that, then that's where the money should go to. Or if there's a fund manager like ourselves, and it's a real challenge for us, for me to run a business in this kind of environment. I actually find it quite exciting, trying to work out how we beat the next guy, how we beat the quant funds, how we beat the artificial intelligence funds, all those kind of stuff. Recently we won a mandate in Canada, and we were on 400 million, and they also gave 400 million to someone else.
Yes.
And the other person was actually a computer, and the people who own that computer had spent $200 million on software and computer, and it's really hard for the little guys back in Australia to compete against a lot of that stuff.
Yeah,
so,
well, it's like playing chess with a computer, presumably.
Well, it is, and I hope long term what will happen is that all the computers will keep on outdoing each other, and that hopefully the human touch or the good stock pickers, the fundamental good stock pickers such as ourselves will win through.
Long may that. I agree with you, David. Long may that continue. Do you have any sectors that you really like at the moment? Because some are really on the nose.
So, with interest rates going up in the US, the currency, the Aussie dollar, will come under a bit of pressure. It's currently around about 70 cents. So that's good for commodity. It's good for some of the commodity prices.
Yeah.
We think the oil side of things is not a bad place to be. We like so people. There's been an underspend on services to the oil industry. So some of those companies that are providing services to the oil industry. So
mining services industry type.
Yeah, that kind of stuff. So we like that kind of stuff. Yeah, so I mean, those are the things.
Yeah, so interesting to get your views. David Paradice, thank you very much for coming in. Well, in other news, transport experts are pushing Queensland to build a new rapid rail network, which could slash travel times between the state's major hubs in half. A $70 billion proposal is recommending bullet trains to cope with employment and population growth.
Queensland train users could one day get to Brisbane, to the Gold Coast, Sunshine Coast or Toowoomba in under 45 minutes. That's the bold new pitch from infrastructure consultants SMEC. The organisation has outlined a $70 billion transport blueprint for the state. It pushes for a new high-speed rail network, which would have a fleet of trains travelling up to 250 kilometres an hour. They've been dubbed bullet trains, similar to those used in Japan. The high-powered trains could halve travel times from the Gold and Sunshine Coasts and reduce travel by 2/3 to Ipswich.
Well, look, I love vision. I love it when people have big ideas, and there's no shortage of big ideas, whether it's here on the Gold Coast or anywhere else around the country. But those big ideas and those visions have to get translated into something workable.
We're always excited by plans that are presented, but these plans, of course, need a lot of money to back it up. And if you're talking about fast trains and bullet trains like you have in Japan, you really need the population to actually back it in.
According to the South East Queensland Mass Movement Study, a major infrastructure boost, like high-speed rail, is vital. The study found major employment and population growth would see demand for efficient public transport increase by 31% by 2031 and by more than 50% by 2041. Brendan Smith, Sky News, Brisbane.
That's interesting, and that's aside from the rather slower inland rail, which is underway as we read. Now, Dreamworld supervisors and maintenance staff are expected to give evidence as the inquest into the fatal ride tragedy resumes on the Gold Coast today. As Sky News reporter Anna Rawlings explains, lawyers for the families of the 4 people who died will also have their chance to question management.
Up to 22 witnesses are set to give evidence as the inquest resumes for its second 2-week hearing. Among them will be maintenance staff who worked at the theme park on or around the day of the tragedy on October 25, 2016. 4 people died on the Thunder River Rapids ride when their raft became stuck and flipped. Kate Goodchild, her brother Luke Dorset, his partner Ruzi Iraqi and Cindy Lowe were all killed in the tragedy. The coroner heard 2 weeks of harrowing evidence in the opening stages of the inquest in June, including testimony that staff weren't adequately trained on the ride and in some instances were told not to use an emergency stop button. Dreamworld's parent company Ardent Leisure has released a statement ahead of the inquest resuming, saying the theme park recently passed a workplace health and safety assessment. Ardent Leisure says it will also adopt all of the coroner's recommendations at Dreamworld when the inquest is finalised. There'll be another round of hearings in November. Anna Rawlings, Sky News, Gold Coast.
Well, let's head to the US now. President Trump is celebrating a landmark success after the United States Senate's approved his nominee, Brett Kavanaugh, as we were saying, as the new Justice of the Supreme Court. It's a move that shifts the balance of power in American politics decisively towards conservatives, but the confirmation of a man who's been dogged by allegations of sexual misconduct was met with angry protests in Washington, including survivors of sexual assault.
It took months to get there, but within hours of the vote, Brett Kavanaugh was sworn in to the highest court in the land. Senators are now busy further defending their decisions.
The conspiracy theory that he accused us of behaving in was bizarre. Everyone knows that when you just interview a small number of people and not the dozens of others who wanted to be interviewed by the FBI, that is a sham.
For conservatives, it delivers a long-held dream after a very bitter battle.
I'm happy that those who tried to destroy his life fell short. I'm glad those who tried to overturn the rule of law and replace it with mob rule lost. I've never been more in my life.
That sound of deep frustration is echoed on the other side. Protesters storming the streets of the Supreme Court, banging on the door in indignation. For Donald Trump, it is a huge victory and the culmination of his most successful week as president. In under 2 years, he has secured 2 Supreme Court justices.
And I want to thank our incredible Republican senators for refusing to back down in the face of the Democrats' shameless campaign of political and personal destruction.
Cordelia Lynch, Sky News, Washington.
What an extraordinary place. Now, the state's top diplomat will attempt to resolve the US-China trade war in talks in Beijing today. Secretary of State Mike Pompeo of the US is expected to discuss tariffs as well as possible US naval exercises in the South China Sea. His Chinese counterparts. His visit follows talks with North Korea's dictator regarding progress on denuclearization.
Secretary of State Mike Pompeo leading a high-level American delegation as he met with Kim Jong-un for the 4th time. After talking for 3.5 hours, Pompeo said he and Kim made progress toward a comprehensive denuclearization deal, but wouldn't give specific details about what was discussed or if any agreements were reached.
We had a good, productive conversation. As President Trump has said, there are many steps along the way, and we took one of them today with another step forward.
According to reports, Pompeo did manage to arrange a second summit between Kim and President Trump. The meeting came a day after the president told a crowd of supporters in Kansas that he has a good relationship with the North Korean leader, claiming there will be no provocative actions from the North while negotiations continue.
Who knows what happens, but I think good things happen. No more missile testing, no more rocket testing, no more nuclear testing.
But some experts say the denuclearization process is stalled. North Korea has been demanding the lifting of some U.S. sanctions in response to their dismantling of a major nuclear facility. But the Trump administration says that won't happen until a final deal is in place, creating a possible diplomatic stalemate.
You've got the president making it clear that he's not willing to give major concessions until he sees action, but he is willing to allow the North Koreans and the South Koreans to settle their differences.
Secretary Pompeo also meeting with officials in Japan and South Korea. His next stop, though, Beijing, to meet with his Chinese counterpart.
A neat segue, a developing story now. Authorities in China say missing former Interpol president is under investigation for accepting bribes. Meng Hongwei disappeared soon after arriving in China last week. His wife says he texted him an image of a knife shortly before she lost contact with him. Sky's Tom Cheshire filed this update from Beijing.
Obviously been scrambling really to get something together. There was an internal meeting earlier this morning, and just in the last few moments they've put out this statement saying that really, here we go, the investigation against Meng Hongwei's taking and giving bribes and suspected violations of law is very timely, absolutely correct, and rather wise. That's what the ministry has said. So that's moved it forward. This is the latest twist. I suspect it's not the last twist. Following the extraordinary press conference yesterday by Grace Meng, who went public with her fears, and she talked about this exchange she'd had with her husband, Meng Hongwei. She said he travelled to Beijing a lot. He's also a Chinese citizen. He's the Vice Minister of Public Security here. And she said that when he landed in Beijing, she sent him a message saying, "I'll call in a few minutes." And then after she replied to that, he sent another message just with a picture of a knife, implying, she says, that he was in danger. That prompted, actually, a statement from the National Supervisory Commission of China about an hour afterwards, saying they did actually have Meng Hongwei and they were investigating him. They didn't say what they're investigating him for, but the National Supervisory Commission is what handles corruption. There's been a big anti-corruption drive. It's a popular drive here. It's swept up hundreds of officials. It's been launched by President Xi Jinping, and coincidentally, some of the people collected in that have been his political enemies. It seems what's happening here, but it is scary. This is not just, a Chinese citizen. This is a head of an international body. Beijing either seeing how far it can push this, it's been increasingly assertive, or perhaps it just didn't anticipate this press conference from Meng Hongwei's wife going so public. So the international response will be crucial right now. So far, Interpol's been very meek in its response. Doesn't seem like it wants to do much. That may embolden Beijing unless there's a more robust response from the international community.
After the break, graffiti artist Banksy sabotaging the Sotheby's sale of his own artwork. More on that next.
Now, back to Ticky.
Some of you may have seen and heard of the elusive British artist Banksy. He's done a lot of graffiti work. Now, he's managed to send shockwaves around the art world, what he's done, after he's booby-trapped one of his paintings to self-destruct moments after it was auctioned off for $1.8 million. As an alarm sounded, the artwork was destroyed in front of dozens of onlookers by a shredder embedded inside the frame. Sky News reporter Adele Robinson has more.
An auction like all others on the face of it, until it was Banksy'd. Underneath the artist's work, which had just sold for over £1 million, a booby trap, as the piece began to self-shred through its frame. It happened at a packed Sotheby's on Friday night, causing a stir of disbelief, then amusement. Art critic Sue Hubbard believes it was a show of anarchy on behalf of the artist.
It's about time somebody actually did try and explode the relationship between money and art, because it is actually really skewing creativity for younger artists. Everything is about money, it's not about creativity. He is getting at all the darlings that are buying his artwork, and it's two fingers to them.
This is what the piece looked like before it self-destructed, one of Banksy's iconic girl with balloon paintings. On Instagram, there was a nod to his own prank. The words, going, going, gone. The mystery of Banksy's identity is as much an attraction as his art, a showman courting controversy and publicity in equal measure. And whatever you make of his latest stunt, he seems to have the world on side. Adele Robinson, Sky News.
Yeah, it's an extraordinary story, and it's created all sorts of questions about who owned what and, whose fault it was, and indeed what it's done to the value of that artwork now. Well, the artwork world got picked up by British cartoonist Bob Morrell this week as well. Here it is. You can show you now. This is with the Chequers agreement going through the shredder, the Theresa May's Brexit Chequers agreement, instead of the Banksy girl with balloon. Well, in other news in the UK, sterling has soared after negotiators say they believe a deal on Brexit is very close.
A soaring sterling as EU Brexit negotiators say they believe a divorce deal with Britain is, quote, very close. And the EU says it's also engaging with new proposals on avoiding extensive Irish border checks after Brexit.
I'm pleased to see that they think that there's a deal to be done, and that perhaps that's because they've offered some concessions which they haven't done up until now. But I'm afraid we won't know too much more detail until the terms of the deal are released.
The pound rose 1/3% to 88.14, its highest level in 2 months. Against the dollar, it briefly rose to a 5-day high of 130.60 before giving back gains. A sell-off over summer has seen the pound tumble, but optimism in recent weeks that Britain will exit the EU with a trade deal in place has helped buoy the currency.
I'd like to think that pragmatism has ruled the day, and that they've realised that they've got as much to lose in a no-deal scenario as the UK has, and that they've compromised on that basis. But let's wait until we see the full details before we make that judgment.
Many investors aren't pricing for a deal to be announced at an EU summit later this month, but in November. Some analysts say any delay beyond that is likely to hit the pound hard, given that most traders don't want to push sterling much higher, at least until the prospect of a deal becomes clearer.
Well, let's cross to London now and see what's driving British and Euro markets with Jasper Lawler, Head of Research at London Capital Group. Jasper, nice to see you there. Now, before I ask you about markets, has anybody how much has this Banksy prank rocked the world? Because I see it's really taken a lot of people by surprise.
Well, firstly, good morning, Ticky. But it is hilarious how the prank was actually done after the auction finished. So obviously, you know, when you're dealing in markets and obviously there's buyers and sellers, there was a genuine buyer there willing to fork out over £1 million and unable to do so eventually. A disrupted market, you might say. It definitely is a welcome change from the typical money changing that takes place in these auctions.
Yeah, and there's some suggestion that it might even be worth more now shredded, the girl with balloon.
That certainly wouldn't surprise me. I'm not too good at pricing artwork, modern artwork, but that certainly wouldn't surprise me.
All right. Well, look, I showed just now a Bob Moran cartoon of the Chequers agreement going through the shredder up on the wall, obviously taking the mickey there. But I also hear that actually there may be some positive news. Can we really believe this around Chequers?
Well, life parodies art, I suppose, Ticky, yes. I mean, maybe this shredded Chequers agreement is now worth more. It's so interesting how sentiment-driven this whole process has become. It was, for the most of last week, it was looking a little bit dire after we'd had that summit. But actually just some positivity from Jean-Claude Juncker at the end of the week. He got out on the right side of the bed and suddenly we're all feeling a bit better about the process. So I wouldn't say this is a done deal by any stretch. The EU seem like it's willing to make some concessions on the Irish border, and obviously that's everything. That's the main thing that's really holding us up here. How can the UK leave the EU, not to be part of a customs arrangement, but still have an open border in Ireland? Obviously, if that can be addressed, or if at least the EU can maybe fudge the rules a little bit, that would really help the process and make the Chequers a lot more doable.
Do you think the reason that Herr Juncker did get out on the right side of the bed was because of the threat of a speech like Boris Johnson's at the Tory party conference, and the idea that actually Theresa May's option may not have the support on your side of the channel?
Well, I think he and the other EU politicians must be increasingly aware of the timetable here, and it seems like Theresa May. There's two takeaways that I had from the Tory party conference. One was that Theresa May is sticking with Chequers as her solution to Brexit. So it's almost Chequers with Theresa May or choose something else, which, for example, Boris Johnson and what he's offering. And so from an EU perspective, I think they thought, well, this is what's on offer. Number two was that actually there was a bit more unity, no real fallout. Even Boris Johnson's speech on a relative basis could have been a lot more damaging. So I think actually the party looked quite together, and Chequers still is the only option.
Jasper, how is the British economy overall suffering through all of this Brexit talk?
Well, it ebbs and flows, Ticky. Actually, at the moment, we've had a bit of an upturn. It's obviously not entirely Brexit related. We had a very good summer for once here in the UK, and so obviously consumption a big part of the economy. People were out there buying different items for the unusually warm weather, and so that actually buoyed the economy. It's not a long-term signal for how well things are doing, but actually it might be enough to pull the economy through and keep economic growth that sort of a 1 to 2% range it's been in for a while, so you can't really complain. There's still expansion.
That's very interesting. Expansion on both sides of the Atlantic, which is good news, I think. Jasper Lawler, thank you very much. And that is all for the show tonight. Tomorrow night, with that bid-in for MYOB from KKR, we'll talk to the opposition, Zero, about how they see the market. Thanks for your company.